You know what? A lot has been going on in the country lately, and many small businesses have gone out of business, really. But the economy is beginning to open up, and folks are beginning to get the vaccination. A lot of states have lifted their restrictions. So new businesses are beginning to spring up all over the place. So there's some things that I want to share with new business owners, things that you can take um, into consideration as you're beginning to formulate your new business. You know what? As a new business, there are tax provisions that can help you. You can deduct up to $5,000 in startup expenses and $5,000 of organizational expenses in your first year of business operation. So what am I talking about? These are expenses that typically are not deducted. They're not deductible in the first year of business. Usually those startup expenses are needed to be capitalized. That means that they needed to be spread up to 15 years or for the for the duration of your business. But that's not happening. There is this caveat in the tax law that you can take advantage of right now. So generally, startup expenses, those are things that you expenses that you incur to investigate whether you want to do your business, whether this is the right business for you. So if this is going to be a profitable business, if you want to engage in this business activity, for you to be eligible to take this expense at this election for the deduction, the expense must be one that you would ordinarily be able to deduct for your business, if the business was actually running. So let me give you some example of what this would be. So this would be the startup expenses in like analyzing the markets, right? Analyzing the potential market for your product or for your service. Now, let's talk about organizational costs. So what are organizational costs? These are costs that you actually pay for you to operate either an existing business or start a new business. So if the cost is paid and it's before the your start date, before the start date of your business, that would be constitute as some of your organizational costs because you're organizing the business, right? So this costs do not include things like taxes, interest, or experimental costs. Those are those things are not included. Let me give you some examples of some qualified startup costs. These include things like surveys. When you analyze your potential markets, your potential customers, who are they? Where do they live? What do they do? Where do they buy from? Those kind of research and those kind of surveys that you spend money on, they're all going to be considered your startup costs. Your wages that you pay to your employees to train them, those are all deductible as startup costs. Your advertising for you to let the public know you're open for business, yay, that's all deductible as part of your startup costs. Those fees that you pay to consultants, just folks that you hire for professional services, those things are also all deductible. All of your travel and related costs to suppliers, customers, distributors, anything that you pay for your active trade or business, for you to for investigative costs, for you to decide whether you want to purchase a business or you want to start your own business from scratch. Those are all costs that qualify as startup costs, and you can deduct up to $5,000 in the first year. Okay, so costs that you that are actually going to buying a specific business are capital expenses, and those are not treated as startup costs. Okay, now what about organizational costs? So these are costs that you incur for legal services. Those are for things like drafting an LLC draft documents. If you have if you have partners and you have you're going to have to need to draft up a partnership agreement. You have directors fees. You have organizational meeting costs. So those things are considered, your organizational costs. So now, what about what does Congress do to us? Congress always gives us things and then they put a catch. So as with everything else, there is a catch, right? So if your expenses are actually $50,000 or less, you can deduct up to $5,000 in the first year, and then you amortize the excess over 180 months. Okay, I'm not going to go into the maths for you. You don't have to do that yourself. Just hire a CPA to do the numbers, to run the numbers for you. What you need to know is that you can elect to deduct the startup and the organizational cost. That election to do that is done on your tax return for the first year in which you're operating your business, and you have to file your tax return on time. So, that's really important. And then there's some other things that you can also do when you're starting up a business. There's something like that's called a bonus depreciation and a Section 179 expense. So that means if you're buying a lot of expensive equipment and things for your business, you can most likely write off a lot of things in the first year of your business. So it's really important for you to formulate your business plan, for you to get your numbers in order, speak to an accountant, reach out to me if you have questions, and then I'll be happy to help you. An accountant, a CPA will be happy to help you. Good luck with your business.